And welcome to ETF Edge, your go-to place for everything exchange-traded funds. I am your host, Bob Pisani. After leading the pack earlier this year, technology ETFs are lagging in the second half of the year, as are almost all thematic tech ETFs, which slice and dice tech in different ways. Let's talk to Dave Mazza, CEO of Roundhill ETFs. He has three of the hottest thematic tech ETFs in the past year, ETFs in general. Also joining us, my old friend Dave Naudick, ETF expert and independent financial futurist. Dave, you launched the actively managed Magnificent 7 ETF a little over a year ago. Big hit, thanks to NVIDIA, still outperforming. It's up 33% this year. But it was up more in July, and inflows have stalled out here. So what's going on? Is the public losing interest in putting money into big cap tech?
I think that really what we're seeing is a reaction to the market reassessing the stellar performance of the Magnificent 7 stocks and what that may mean for the future. We know these names have had exceptional performance in 2023 into 2024, really driven on the back of excitement about AI and strong earnings. And this most recent earnings season made it clear that companies are still going to need to be investing a significant amount of CapEx into AI before there's a large benefit. But at the end of the day, these names are still performing well. Certainly we saw a wobble in July and August. And if you look over the last month, performance has generally been in line with the market. So it has become a bit more two-way from inflows and outflows into the fund. But if we look over the last month, we have continued to see inflows in the Magnificent 7.
Yeah. The other big story, big ETF thematic story is AI ETFs. You've had Chat out, CHAT is the symbol. You launched that a little over a year ago. And, you know, in theory, this has got all the right names. It's got NVIDIA, it's got Microsoft, Alphabet, Meta, Adobe. But really, it's just performing in line with tech and hasn't done much for months on end. I think it's up 11%. Here you see the holdings, all the right names in here. But this is a problem for thematic tech in general. How do you find companies beyond the obvious ones that are going to truly benefit from AI? This broadening out story is having a little bit of a tough time right now.
Yeah, the Chat ETF focuses really on looking at companies in two ways: identifying a keyword search of companies in their financial documents saying that they're involved with terms related to generative AI, and then we use fundamental analysis to really rank and score them, really to ensure that a company is not just saying they're doing generative AI and saying they're selling AI chips and not doing it. Look at NVIDIA versus Intel. If you were to look at it, using the word count for Intel, they'd even be higher than NVIDIA because they're trying to make a case that they're involved, but we know they're not, and that company is facing some real struggles. So that's how we do it. What's interesting, though, to your point, though, is thematic tech in general has had a bit of a problem, and the problem has been the Magnificent 7. Is you've actually been performed better by just being overweight the 7 names, not trimming back NVIDIA. But in the case of Chat, we actually have exposure to names outside of just the most obvious. You know, there's companies like Dell in the portfolio and others, and ServiceNow and Salesforce, who are using AI and integrating AI. But right now, all the focus has really been on the chip names, and particularly that one name that we talk about all the time.
Yeah, Dave, Roundhill.
Yeah.
Dave's the king of thematic ETFs here. I mean, look at the list of video game ETFs,
Metaverse.
Cannabis ETFs, Metaverse, luxury goods, GLP-1, sports betting,
yeah,
right?
Yeah.
We go on and on. But you and I have talked about this. Does it make sense to chase themes like this as an investor? Are there good thematic tech ideas? Are there stupid thematic tech ideas? What's the big picture?
Every thematic idea is going to have its moments in the sun and its moments where you might want to be short it. And I think that's the important thing to think about here, whether we're talking about the Mag 7, which I think has its own unique use cases, or something like a GLP-1 or a Chat. The case that you're making is you're trying to capture headline movement, really. If you're a trader, there's nothing wrong with that. If you're basing your 30-year retirement plan on owning a single thematic ETF, you probably need your head examined. So this is a question of having the right tools for the right job. There are a lot of folks out there who do trade more actively than just once every congressional election they rebalance their portfolio. For the folks like that, having the ability to go long or short these very obvious big headline themes is very valuable. So it's reasonable to have some skepticism. I don't think anybody's going to say put all your money in the mags and never think about it again. But then again, might you want to be over or underweight versus your core exposure? Absolutely.
Why, though? here's the problem. Thematic tech, we all get hot and bothered over pot ETFs, right, or cybersecurity ETFs or anything else like that. And somebody creates an ETF and it's the top of the excitement, they're buying high.
Right.
And then the excitement kind of wanes. We saw this with all of these, though, didn't we?
Except the counter to that is that we've had thematic ETFs, frankly, for about 25 years. We haven't talked about, for instance, solar in a while, but TAN has had an absolute tear lately. That was a thematic ETF.
So it went in, went back, fell out of favor, came back in
right,
again.
Exactly.
If you stay around long enough.
But that's the point. These tools have real value. Are all of them going to be going up at the same time? Of course not. Just like any sector allocation, energy might be down and tech might be up, or vice versa. This is basically the new way of thinking about sectors. The traditional way doesn't make nearly as much sense as focusing on headline movers for new things.
I guess the other problem I have, Dave, while I'm complaining about thematics, is they're expensive. I mean, you know, OZEM, your other one, your weight loss is 0.59%. Your sports betting is 0.3, I think 0.29%. You know, these aren't cheap, Dave. That's another issue that has to go into it. So go ahead, defend your pricing structure for me.
No, happy to do so. I think if you compare thematic equity ETFs from Roundhill or many other issuers, they're going to be more expensive than ultra low cost core portfolio building blocks. And I think the other Dave made a good point a few moments ago is that it really depends on your objective. So if I'm looking to build a long-term portfolio and really set it and forget it, not trade, not think about it, there's probably tons of low-cost ETFs, and you can do so at really extremely low basis. But for investors who are looking to either do more, have the potential to outperform, not a guarantee that any thematic is, it may be worth paying up for either credible active management or a means to identify a particular outcome in that space. And so when I think about it from that perspective, many thematic ETFs are actually maybe less expensive than traditional active management and mutual fund form. So it really depends on kind of how you're thinking about it from that point of view.
Yeah, it's definitely less expensive than traditional asset management, which would charge you 2% for this
Fair
a long
enough.
time ago.
Fair enough.
But it's still 0.6%, 0.3%.
But that's the name of the game. If you're going to do something narrow that requires, frankly, more monitoring, like it takes more energy to focus on constantly reevaluating who is and who isn't an AI company. I mean, I can't keep track, can you? So it takes more work. People get compensated for it. It's also the case that as much as I love Roundhill and Dave and the funds that they've got, it's pretty unlikely any of these is going to be a $50 billion behemoth anytime soon. They're narrow plays, and therefore, to cover the basic cost of running them, you should expect to pay more. If somebody's running a $50 billion S&P fund, you should expect to pay a lot less.
Yeah. I want to move on here. Another thematic ETF you had some success with that started with a splash this year was your GLP-1 weight loss ETF. There's 20 companies here, but 40% of it is Novo Nordisk and Lilly. Lilly's 20, Novo Nordisk is 20. I remember I had you on, Dave, when it debuted in May. It's up, 10% since then. But here's the breakdown here. It's how much upside is still left in this weight loss business? Novo Nordisk is up 300% in 3 years. I think Lilly's up 500%. In 4 years. This is a classic ETF thematic concept here, but what more is left here? Is there other things that have come out? It's going to be new stars. Tell us why we should be watching this.
Yeah, so it's really interesting. When you think about OZEM and the GLP-1 and weight loss space in general, is we're really at the early days. And yeah, you're absolutely right. The companies that are actually selling drugs in market, Lilly, Novo, have seen their share prices grow astronomically. But also because their revenue that they're generating and projected to generate from this really new line of drugs is astronomical. I view them as the NVIDIAs of the weight loss space. They're the kings. They're so far ahead of other companies that they deserve such a high weight in a thematic weight loss portfolio. However, the way we identify the names of this portfolio are companies that are either selling drugs in market, like Lilly and Novo, or getting weights based on their various phases. So if you move up successfully from a phase 1 to a phase 2 to a phase 3, you're going to gain more weight in the portfolio. And we're beginning to really see, again, the early stages of this. where there's companies like Viking Therapeutics, Zealand, Terns Pharmaceutical, who are doing even more innovative things, right? Right now, the primary means of getting weight loss drugs are injectables. And some people may be turned off on this, it may be uncomfortable. Now we're seeing companies make a lot of progress on oral therapeutics. That's actually a hard scientific challenge, just because of the way those drugs are absorbed in your system when it comes to GLP-1s. But people are working on it, and it's exciting that OZEM actually has been structured in a way to actually outperform, broader healthcare because of that concentration in names that have done well. So, of course, we can't guarantee what the future looks like, but I do really think it's early days for these companies, even if their returns have been stellar to date.
But here again, I'm giving you a chance to justify your fee structure here. OZEM, what was OZEM's 0.6%, I think. You've got to stay. This is actively managed, right? So you have to decide if you think there's somebody who's coming up that's got some new innovation here, that you're going to give them a higher weight, right? I mean, you actually have somebody doing this, right?
Yeah, that's absolutely right. So the fund is managed by the Roundhill Investment Committee. So it's not a set it and forget it. We didn't just run a screen and these are the names, and we hope that the GLP-1 space stays the same. It's actively managed, right? We're using a rules-based process to help guide that. And that's why we believe it deserves a higher fee than you could find with a traditional healthcare sector ETF. To date, we think performance has been there. That in the grand scheme of things, an incredibly short period of time, and so time will tell. But really, the idea here is to give the precision exposure that somebody wants, whether that's for 3 months, 3 years, or 30 years.
Right. Okay. So basically, we work very hard. We have a lot of professionals. So stop bugging me about our fees, will you please?
Bob,
here's how much more innovative can you get, though? I mean, this stuff is unbelievable. All of us know people are using it.
Oh, absolutely.
Lower weight reports, lower blood sugar level reports,
it's have big economic
potentially
impacts.
Lower heart attacks. It's going to revolutionize the healthcare
absolutely. And I think
business
that's
continues.
legit. And as Dave was saying, the important thing here is not, is the number going to go up? When you think about thematics, that's not actually the question. The question is, does this ticker represent the theme well, whether that's up or down? And I would say the way Roundhill's approached this definitely fits that mark. Having an active manager overlay on it makes a lot of sense because this is fast-moving technology.
I agree with it. In this case, active management makes a lot of sense. Goldman Sachs research numbers, the obesity treatment market could expand 16 times its current size. It could hit 100 billion. That was a number we've been throwing around for months now, by 2030. And that means a lot of companies are scrambling to get into this business. I want to move on a little bit. Dave, you've got leverage products out there for the Mag 7 ETFs. Now we're going to get into, I'm going to beat him up about leverage products. 2 times long you have, okay? Come on, I beat you up about your fees. Now I'm going to beat you up about the leverage. 2 times long, well, you have a daily inverse, right? Okay.
That's true, yeah. So we have a 2 times long MagX and then a daily inverse MagQ.
Right, not to be annoying, but does the world really need all of these leverage products, Dave? I mean, is there a demand for this?
Look, we've talked a lot about leveraged inverse ETFs before. Before Roundhill, I worked at a leveraged inverse ETF specialist as the head of product. So the way I really firmly believe investors and particularly traders need to think about these products is, do you have the ability to make a buy, sell, and hold decision daily? If you don't, stay away. Look for something else. But when we're thinking about the ecosystem, and this is important as ETFs have grown, we saw the growth in MAGS itself, which is, even that was innovation to be able to provide that much precision in an ETF. For the trading community, we were getting demands of having a leveraged version. And again, I see the point that some would say, who needs them? But if you look at the marketplace, it's grown significantly. There were once a really it remains a very small portion of the broader ETF market, but there is a case to be made for traders who are looking to maximize their upside in shorter period of time, willing to take that risk. These tools can be better for them, and perhaps even better for them if they're trying to do that with margin or options in their own brokerage account. So time and a place for these ETFs. I hear your point that they really need to be used properly. I completely agree with that. But we thought with the Magnificent Seven as sort of a subsector of the broader equity market that we think continue to have legs, it made sense to have a solution for someone to amplify upside or provide that edge on the downside.
So here's your chance to riff on this. And we have talked about this for years and years and years. He is right. It is shocking how much of the volume these things attract.
Oh, absolutely.
From the leverage guys who want to play this. It's shocking how much they charge. It's shocking how much money they make. I always said ProShares is the company you want to be involved in because they have the monopoly on a lot of this. With all that said, I have said this for years, leverage and inverse products are 2% of the volume and 98% of the problems for the ETF business. I have fought for years it should be a separate product category. I don't know how you feel about it, but riff on this. You're the expert here. Does the world need all of these?
We talked about this the whole run up to the ETF rule about whether or not there should be a separate bucket for complex products, whether that's leverage, whether that's derivatives use. The ship has sailed. This is where we are. We have now effectively the mutual fund market in 1995, where there's 4,000 products, of which about 800 of which are what we would consider cheap core beta for building long-term boring portfolios. Almost the rest of it, thousands of funds, are effectively trading vehicles. Whether they're marketed that way or not, that's how they get used when you look at how long the hold cycle is for most of these funds, whether they're leveraged or not. Like a lot of these thematics get used that same way. The average holding period on thematics is weeks, not years, right? So people use these as ways of expressing short-term opinions. The ETF market has just evolved. It started out institutional, it moved into wealth and long-term asset allocation, and now it's become largely a retail and trading vehicle dominated space. That's just the way it works. What it means for investors is you got to be careful. You got to know what you're buying and why you're buying it.
And we have to remind viewers that these products reset on a daily basis and that the public cannot get their head around the daily reset.
Yeah, if it says, I mean, there are a few folks trying to launch versions that don't do this, but if it says leverage or if it looks like it's got inverse qualities to it, chances are you need to watch that position every single day.
Dave, I just want to move on here. You had this big hit with the Magnificent 7 ETF. I know that you were going to be launching a similar concentrated bet on China stocks, the Brownhill Lucky 8. Bring us up to date on what, if anything, ever happened with that.
Yeah, that fund's been filed for, and hopefully we'll have more to talk about soon when we identify an appropriate time to launch that fund. I think really what's interesting there is to Dave's point a moment ago, the ETF industry, particularly post the ETF rule, continues to have opportunities to innovate. And MAGS really was innovative in how it's structured, right? To provide that precision just to the 7th security. And we wanted to apply that to another market. Certainly a lot of question marks about the Chinese equity market and whether it's the best time to get in or the worst time. But we've been doing a lot of work on identifying the right names for that, structuring it appropriately so it's going to be robust in a variety of markets. And I think it could be really interesting because there's actually a lot of similarities to the Magnificent 7 stock in the U.S. to some of these names like JD, Alibaba, Tencent, what have you, in China that are mega national companies, don't have the state-owned enterprise issues, things of that nature, and that really almost are their own sub-economy, their own economy outside of just domestic China. So more to come there, and I think I'm excited about seeing that product come to market.
Well, so here you go, essentially a concentrated bet on China.
Right,
too,
exactly.
Same thing.
Again,
and someday China is going to be a good investment.
If you're a super bull on it, that would be a great way to play it. But also, if you're a super bear on it, wouldn't it be great to be able to short it cleanly?
Yeah, absolutely. All right, gentlemen, great discussion as always. That does it, folks, for this week's ETF Edge. My thanks to Dave and to Dave, both Daves. We've asked Dave Noddick to stick around and chat about this record year for ETFs. We have record inflows. We have record product development. It's really something. And that's going to come up on the ETF Edge podcast right after this. Remember, also, you can see all of our shows on our website, all of them, etfedge.cnbc.com. Everybody have a healthy, happy, and safe trading week.
Get the ABCs of ETFs with the ETF Edge newsletter. Your weekly update on the hottest trends, expert analysis, actionable ideas, and exclusive insight from host Bob Pisani. Sign up now at cnbc.com/ETF Edge newsletter.